Hi everyone, check the pinned comment. Okay, let's focus on the preferred and alternative high time frame, medium time frame and low time frame scenarios in this video, starting with the alternative high time frame scenario where this is a W, X is already finished and we're looking for a 3-wave in the Y to the downside. Now in this scenario, the first part is then an ABC in this bigger wave A, where we have a 3-wave in the A and we have to wait for a 3-wave in the B, because so far we did not have a deep enough retracement to call this a 3-wave structure. It's still a very impulsive structure, so it needs to come down first before going up, ending most likely in the most common target area for wave B, which is the 1.38 and the 1.236 Fibonacci, taken from the highs over here to the low of A, for then a potential trading setup if we go down and then go up to enter inside this area with the stop loss above. However, of course, this is still an alternative scenario where we can trade it then to the downside with the target of Y currently being then about 10.8k. Also nice confluence over here with this support area, or at least an area that we haven't tested yet since 2020, because we just went up and actually never came down. The preferred scenario on the higher time frame is that wave C is not yet finished, as wave C did not yet hit the most common wave C target area over here, which is the white box. So the scenario is the same, it's a WXY, but then X and C are not finished, as we are in a 1, 2, 3, 4 currently working on wave 5. It is important to note that the rare target for wave 5 has been hit, and also the minimum requirement for wave 5, the 0.618 you see on the right side at about 26.5k, has been hit with the wick. However, the most common target is the white box between 27.7k and 34k. Also important over here is that the 0.382 over here, taken from the all-time high to the low of W, is the minimum target for wave X, which currently sits at 29.6k. Also, it has nice confluence. I get this area, the most common wave C target area, and the 382 have nice confluence with this support area, which can then turn into brilliant resistance for then a potential trading setup to the downside, which you can see over here with potential entries laddering inside the white target box, stop loss somewhere above, trading it to the downside for wave Y. But important to note is also this area above the white target box is still a rare wave C target all the way till 40k. So once price moves to the upside, we have to see how it moves to the upside and what the lower time frame counts will be to get a better idea of a potential trading setup also on the lower time frames. Then if I go to my low time frame, or at least medium time frame scenarios, then this is one scenario that I have where we have a wave 5 yet to finish. So we are currently potentially working, I'm messing up here, working on a wave 5. But then this is a 1, 2, 3, 4, 5, where I believe wave 4 might not yet be finished. And as mentioned in my video yesterday, if wave 4 wants to finish above the 0.5 Fibonacci, taken from the low of 2 to the high of 3, it first needs to go up quite a bit, because if this is a zigzag, meaning this is a 5-wave structure to the downside in a wave A, followed by a 3-wave B and then a C, wave A and wave C have a 1-to-1 relationship, which basically means that price has to go up in order for the 1-to-1 ending above the 0.5. So if we quickly take the fibs and we do a 1-to-1 test right now, you can see that the white line in the middle, as it stands now, is very nicely positioned above the 0.5. And with the price action we had yesterday, at least when I went to bed around this area over here, it was not as the 1-to-1 would end up below the 0.5. So that's why I mentioned I want to see price move to the upside before then a potential move to the downside ending above the 0.5, which so far has happened. The invalidation is candles closing below the 0.5 for this wave 4, and then after wave 4 we expect a continuation to the upside for then a potential wave 5. The other scenario that I have, which is currently the preferred scenario still, is that this is a wave 1 followed by an ABC in the 2, which also is an ABC, is a zigzag, a 5-3-5 move, which also is the most common corrective move in a wave 2. And then we have a nice 5-wave move in the A, followed by a 3-wave move in the B that you will see on the low time frame count in more detail. And then eventually we expect a 1-to-1 move to the downside in wave C. Now it is important to notice, I actually didn't change these fibs over here, that the 1-to-1 at the moment is quite high above the target box. So if this is currently the status of the 1-to-1 relationship, not exactly, there we go. You can see that the 1-to-1 right now is above the 0.5 as mentioned with the other scenario. However, a rare target for a wave C is the 1.618, which is quite dark, but it is right there inside the circle at about 21.9k, and this is still a rare target. So still anything in between these lines over here is a target, including the target box. So it's still an interesting area, but of course we can also turn around the 1-to-1 if we would move to the downside. Now I do think a potential trading setup would be the best, or at least the best case scenario that we can get is price moving to the downside and hitting this target box. Also, the golden pocket is the most common area for a wave 2 before then moving into a wave 3. But one should not forget the 0.786 is also a common target area. So with a potential trading setup, it means that entries can be laddered. Actually, they can be laddered all the way from the 0.5 to the downside. But it's important to at least note that with a stop loss, it should be either below or at the 786. But remember, the 786 is still a target for a wave 2. But when I look at support areas, for me, this is a good support area, but then the next one is down here between 20.5k and basically 2k, while the target box in the middle is between 22.6k and 21.9k. So it's still quite a drop, and also we would go below the 0.786 if that is the case, which is something I don't necessarily prefer. Now I wrote CVD on my line over here, or on my chart, because I think it's important to at least mention that if we look at the CVD chart, and this is then going to the higher time frames, you will notice, and I explained this in a bit more detail in the video of yesterday, you will notice that we move to the downside. Many people have been selling as the CVD. What these lines show is they basically show selling, market selling and market buying. So it's people actually buying and selling, not the limit orders. But what you can see is we reached the same prices as we did here. So a couple of days ago, we were also at 25.2k. We reached the same prices, but as you can see, the CVD line is a lot lower at the moment as it was over here, where the lines were a lot higher. That means that this move to the upside is supported by limit orders, which is actually bullish. So this is a move that is not necessarily supported by people market buying, but it's supported by limit buying, which quite often are bigger positions. Now, if we then zoom in just a little bit and we go to the 1 hour, I also think it is at least important to say that, and I wrote this in a community post, it's at least important to say that if we have this move to the upside right now, we can see that this low, the low of the impulse over here, had a CVD, a yellow line, as you can see over here. This was the low on the CVD, on the yellow line for this low. But if you then check my cursor line to the right side, you can see that this area over here is below the low that we made, the CVD low. I don't know how else to explain this. So the yellow line basically is lower in this range where we are right now than it was at the low, basically meaning more people are actually market selling in this range compared to what they did here at the lows. So interestingly, we already have bullish divergences for potentially a move to the upside. However, I would prefer still price to come down for a very neat ABC, which then also builds more bullish divergences between this low and the potential low to make for then a move to the upside in a wave 3, which is currently my preferred scenario. And then if we go to the lower time frames, then I have 3 scenarios to show you. The first one is the, for me, least likely one. Of course, we had a little bit of a push over here. A little bit of volume coming in as well. I mean, look at this. It's a spike, yes, but compared to some other areas of volume, it's actually nothing too special. This then being a 1-2, 1-2, and we're currently in a wave 3 to the upside where we're going to take this high. That is most important for this scenario. This scenario is all about taking this high. If we take this low first, or actually this low, because then it's a 1-2, 1-2, and it goes to the upside. The moment we take this low, it's invalidated. The reason this is my least likely scenario is because if this is an A wave, a 5-wave move to the downside, and this is a 3-wave in a potential B, and this then being a C, it's a very, very shallow C. C didn't even hit the minimum target that's actually for a wave C. It's the 0.618 taken from the beginning of A to the low of A to the high of B. So, man, it's so rare to see then a wave C not hitting the 0.618. But hey, it's trading, it's Bitcoin, it's volatile. You never know what happens, but that's why I have a red X over here. because it didn't reach the minimum target. And then in this scenario, this would then be a 1 with a 1, 2, 3, 4, 5, eventually a move to the downside, and then we have a 1, 2, 3, 4, 5 once more in the 1, another move to the downside, and then this is a wave 1, 2, and then we move up in 3, 4, and eventually 5 to the upside. And I will talk more about the potential trading setup and what I'm doing at the moment right there in a second, because the second scenario that I want to show you right here is actually this one first. So in this scenario, this is the one also highlighted yesterday in more detail, where we then have a 5 wave in the blue A, followed then by a 3 wave in the B, and these are the target areas for wave B. We already hit the 0.382, so I didn't include it in this video, but the 0.5 also hit it over here, and then eventually these are the other targets for wave B, which now at the moment we almost basically hit the 0.786, which is still for wave B a very valid target. So then this is an A, B, and we could be looking down for eventually a wave C. Now, if this is a W or this is the W, it doesn't really matter too much where the W is positioned, and then this is at least an X or this is an X. We had this wave Y, and as you can see, wave Y is actually very long compared to W and compared to X, which does start to make you think in some way like, hey, what might this be? Is this then maybe a W, X, Y, X, Z? That's also possible, a little bit different than the scenario on the chart right now. But at least what we said yesterday is, hey, this can also be a W, X, Y, and then X, and then we expect a Z to the upside. These targets over here are the targets for wave Z. The yellow boxes are a little bit rarer than the white box. The white box is between 25.5 and 25.7K, with the highest rare target 26K basically. You can also check all these levels yourself, by the way, by clicking on the other link in the comments, or clicking the link in the comments, which is my chart. You can literally go to my chart, and if I have this on my chart, you can see this on my chart, and you can move your own cursor, check the levels and everything I do as well live. So just a little tip. But then we currently reached the rare target for wave Z in this scenario. So the Z would go up here. And we are above, and that's the thing, right? We are above the wave Y, basically maximum target over here of the 1.618. I mean, we're still ranging around this 1.618. But of course, this scenario then becomes at least a little less likely because we moved so high above this wave Y target, where maybe this being then a wave, what is it? Wave W, X, Y, X, Z could have had better targets, but that's something for the video later today. So then my last scenario, this is still valid of course, then my my last scenario before I show you the potential trade is this then being a wave A, again 5 wave A, followed by an A, B, and this then being a C with a 1, 2, 3, 4, 5. The most common target for wave C, funny enough, has been hit with wicks only, which is the 1.618 Fibonacci, taken from the high to the low, high of A to the low of B, and the 1.618 trend-based fib extension from the low of A to the high of A to the low of B. And it's actually quite nice. We wicked into it, so that's quite ideal, I would suppose. So this can also still be an A, B, then a wave C, and we still expect a move to the downside. As you can see, my preferred scenario is mainly another move to the downside, and that is because you want a complement wave next to this one. Like this was, by the looks of it, a very clear 5-wave structure, a very nice wave A. It doesn't look to be a wave C in some sort of A, B, C, in my opinion, because B is way too high in that scenario. So the most likely high probability scenario is this being a wave A, followed then by a B, followed then by a wave C to the downside. So the potential trading setup in this scenario can be used for both of these scenarios I've just shown. Let me put on the target box as well, because as you can see, target box has been hit perfectly with a bit of a reaction as well. This is the basically trading idea setup that I showed in the past couple of videos as well, where one could enter in the, or actually yesterday, where you can enter inside the preferred area for wave Z, stop loss somewhere above, and then eventually trade it to the downside. Of course, now price is a little bit higher, so we could even do this. And in the other scenario, this one, the most common target area was here, so you would have ended up in the wicks. But hey, I didn't show this scenario yesterday because we didn't think about it, that it would do this. So yeah, this is still an interesting potential trading setup. However, as I always mention on this channel, myself and everyone subbing to this channel, we don't catch knives. We have our clear strategy based on statistics. We know exactly what our strategy does, considering with the win rate and the RR. And meaning we don't catch knives is, hey, we had quite a bit of volume over here. That's absolutely fine. We're not entering in the first wick. At least that would be my thing. I am waiting for price to show its hand. I am waiting for a couple of entry requirements, because Elliott Waves is a bias for me, and my bias is downside. But Elliott Waves is not my entry, like trading entry strategy. My trading entry strategy is actually different, but I use Elliott Waves for my bias. So currently, as it stands now, none of my requirements have been met to enter a short position. I'm still on the sidelines, I'm still waiting. If price goes to the downside without me, I'm absolutely fine with that. I have no problem with that at all. Very normal, I'm used to that by now, being a couple of years in the markets, no problem. But I'm still waiting with my entry requirements, and only when all of my boxes are ticked, that is when I would go into a short position in this scenario, then go into a short position and trade it to the downside. But as it stands now, I'm on the sidelines. We don't catch knives. What we do on this channel is we wait for our entry requirements to be met, and that is when we enter the trades for a potential downside scenario. Also, if this is a potential trading setup that would fit your strategy and plan, you could also put the stop loss for extra safety above here, which is still, if we consider this to be a trade, it's still almost a 1 to 3, and if we go to the target box, a 1 to 4 risk to reward scenario. So that is actually still very, very nice. So I hope this video was helpful or valuable to you. Thank you for watching and subscribing, and I will see you at my next video. Bye bye.